Today is Monday, June 5th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financial markets this morning, Alan, now that the debt ceiling issue has been resolved, so to speak, what do you think will be the impact on the stock index futures?
Well, there's an old adage that uncertainty means lower prices for the equity markets, and yet we have seen the stock index futures performing very well. So with that being resolved, the debt ceiling issue, it I think is one impediment that has been removed, and that would imply that we're likely to see follow-through gains in stock index futures. And it's not just the way futures have performed for the news that the right markets have moved as they should in a situation where there is likely to be upside potential. That would be some of the bull spreads working. So with the debt ceiling resolved, so to speak, for now, I think it clears the way for some at least short-term follow-through gains.
Sticking with the indexes, Alan, why is the NASDAQ Futures leading the way over both the S&P 500 and the Dow?
Well, the NASDAQ, of course, is more susceptible to interest rates. So if traders are anticipating that interest rates may come down later this year, that would benefit the NASDAQ more than the other indices, in fact, all the other indices. So I think that is a sign that we'll probably see follow-through gains. So it's another indication that the stock index futures are likely to have some additional strength. And NASDAQ has led the way. In fact, it leads the way in both directions. It led the way on the way down last year, and it has led the way up this year. So another indication that there may be some follow through, at least short-term strength in stock index futures across the board.
Lastly, Alan, reports this week. What are we looking at?
Well, first of all, most of the important reports came out today. In fact, all three reports were on the weaker side, or at least weaker than anticipated, and that would be the purchasing managers composite coming in weaker at 54.3, factory orders up not as much as expected, and the Institute for Supply Management Services index at 50.3. The guess was at 52. So all three reports coming in weaker. However, on Wednesday we'll have the April consumer credit report at 2 o'clock. That's anticipated to be up 21 billion. And Thursday, jobless claims, that's always a report that has an influence, and that is expected to be up 240,000.
Mark, let's talk about the grain markets. The weather seems to be taking center stage. I know here in the Chicago area, we're looking for rain. The gardens need some water. What's it look like this week?
Overall, a mixed bag. Precipitation this past weekend was largely confined to the western Corn Belt. Some spotty rains did pop up in Iowa over the weekend. However, coverage was very spotty. Less than 10% of the state receiving over half-inch of rain. Much of the central and eastern Corn Belt continues to be cut off from any meaningful rain events. This week will bring opportunities for rain for much of the Midwest, but very light amounts here in the eastern half of the Mississippi. Cooler temperatures are welcome. Longer term, both the GFS and the European weather models do suggest some better widespread rains beyond day 10. However, confidence in forecasts that far out are not terribly high. Our meteorologists at World Weather Corporation remain skeptical of any widespread rains across the eastern Corn Belt until we see an opening of Gulf moisture up here through the Midwest. And that's just something that's been lacking in recent weeks. So weather markets are upon us, and as always, that hypes up the market volatility.
There's a crop progress report this afternoon. What are the expectations for that report?
Well, with last week's heat and dryness, I look for a pretty sizable drop in corn conditions. Last week, 69% of the crop was rated in good to excellent shape. I think that will fall by 5 to 6 percentage points this week. That should keep conditions below a year ago and below its historical average. Both soybeans and spring wheat planting progress are likely well over 90% now. And initial ratings for both those crops are also likely to be, mixed for soybeans and probably pretty pretty good relative to their historical average in the spring wheat. I look for another 1 to 2 percentage bump up in good or excellent in the winter wheat as drought conditions in the U.S. Southern Plains continue to ease.
And Mark, Friday we have a bigger USDA report. What are the expectations for Friday's report?
Well, I look for higher ending stocks across the board in corn, wheat, and in soybeans, mostly due to the weak exports. Corn stocks likely to jump another 50 million bushels. We'll expect modest increases in soybeans, about 15 and 10 million bushels in the wheat. I don't think we're going to see production changes just yet on corn or soybeans this month. We do have a big stocks and acreage report at the end of June. That will shed light on any acreage changes. Historically, USDA does not make yield changes in the month of June when we have a dry spring and plantings go quickly, much like we've seen this year. So I look for corn production to remain unchanged at 15.265 billion and soybean production just over 4.5 billion. I do look for an increase in the winter wheat production. I'm going with an estimate of 1.176 billion, and that is up 46 million bushels from the USDA estimate in May. In South America, I look for another 2 to 3 million metric ton drop in Argentine soybean production and another 3 to 5 million metric ton increase in Brazil's corn.
Thanks, guys. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.